Right, it's time to get proceedings underway. So a warm welcome to those attending and also to our viewers watching live on the Council's YouTube channel, Hillingdon, London. This is a meeting of the Audit Committee. My name is John Chesshire and I'm the chair of this meeting. Details of the business to be considered today is shown on the agenda, copies of which are accessible on YouTube underneath the broadcast. In terms of housekeeping, we're not expecting a fire drill here today, so if the fire alarm does go off, please follow officers to the fire exits and out of the building to the designated meeting points. For those in the room, please switch any mobile devices to silent before the meeting starts. For those watching via YouTube, if you're so minded, you can complete one of our residents' feedback forms. These can be found in the information section underneath the YouTube video. These forms are intended to help us improve the way that we run our meetings. In terms of attendees, we always sort of briefly introduce ourselves. We sort of go round anti-clockwise around the table. I've introduced myself already, John Chesshire, Chair of the Audit Committee. I'll turn to my right. Thank you.
Vice Chair.
Councillor Kishan Bhatt.
Councillor Nick Dennis.
Councillor Tony Bowles.
Councillor June Nelson.
Councillor Martin Goddard, Cabinet Member for Finance.
Gothima Abrams, Manager for Ernst & Young.
Stephen Reid, Audit Engagement Partner.
Larissa Medonier, Senior Manager, Ernst & Young.
Tony Zayman, Chief Executive of the Council.
Alex Brown, Head of Council Fraud.
Claire Baker, Head of Internal Audit and Risk Assurance.
Andy Evans, Corporate Director of Finance.
James Lake, Director of Pensions, Treasury and Statutory Accounts.
Ryan Dale, Democratic Services Officer.
Thank you very much indeed. Sounds like we have the amps turned up to 11 this week. No problem at all. Let's move on to today's agenda. So agenda item 1 will get the meeting properly underway. Apologies for absence.
So we have apologies from Councillor Higgins with Councillor Batt substituting.
Thank you very much, and thank you very much for substituting today, Councillor Batt. Agenda item part 2, declarations of interest. Is there anything to declare that we haven't sort of recorded previously? Nothing there. Thank you very much indeed. All of our agenda items today are part 1, so there won't be any separate part 2 items to consider privately. So it's all part 1 today. Agenda item 4, the minutes of the meeting held on the 12th of February 2024. We've got the meeting minutes there, very comprehensive again. Thank you, Ryan. In terms of the minutes, any comments on page 1, 2, 3, 4, 5, 6, 7, 8, 9 and 10. Then I think we're happy to accept the minutes as drafted. Thank you very much again. We've got a busy agenda today, so let's dive straight into agenda item 5 then, the external auditors item being introduced by James. Thank you very much.
Thank you, Chair. We have a number of items in this report, and I'll start with the government consultation, which aims to clear the national audit backlog and also attempts to get audits back on track, back in line with the statutory deadlines. The consultation mentions a number of phases. Phase 1 is to ensure that all audits for 22-23 and prior periods are cleared by September this year. Those audits which are close to completion should be prioritised, the government states, to get those finished off, but the remainder will require an audit disclaimer. In terms of Hillingdon, we're in that position where the council won't be having a 22-23 council audit, albeit EY have done work on value for money and the pension fund, but there'll be no council audit. The government has yet to issue guidance on the content of the audit opinion, but it should emphasise that the disclaimer is due to a system reset rather than any underlying problem with the council, unless of course that particular council does have a problem. Phase 2 sets out deadlines for future audits, gradually getting closer back to the normal deadlines. For 23-24, so the current year we're in now, they're suggesting that the audit deadline should be May 2025. However, neither EY nor ourselves think that that's a sensible date, as the audit period is too long and it also conflicts with other sort of key pieces of work that both teams are doing at that time. In our response to government, we fed that back and suggested that the deadline needed to be brought forward. However, in terms of our audit, we've agreed with EY that we would both work towards completing the audit around the November 24 deadline. The consultation also suggests that local authorities should still publish their draft accounts at the end of May 2024, so we'll be maintaining our current deadline to produce the accounts by that date. Next on the list is value for money. This has now been completed for the Council for the year 22-23, with no items being reported by exception. However, the report does highlight current challenges facing the Council, such as the 23-24 budget pressures, savings requirements, and also the increasing DSG deficit. Next, we have the Pension Fund Draft Audit Results Report for 22-23. There are some items still to be cleared, but these are not expected to cause a significant delay. The report states the accounts currently in its sort of draft format say that the accounts give a true and fair view and have been prepared in accordance with the relevant guidance and regulations. Next, I would like to advise the committee that we have now received our 21-22 audit certificate. Sorry to jump around all the years here, but 21-22 audit certificate. The audit was done back in September last year, but EY can't actually give a certificate until the national audit say that no further audit requirements are required from them, and that basically is around the whole government accounts. So we weren't picked to be audited on the whole government accounts, so EY were able to issue the certificate. Lastly, in terms of my highlights, we've got 2 audit plans, one for the Council and one for the Pension Fund, which set out materiality limits, areas of audit focus, and as mentioned previously, we're working towards a November 2024 completion for the 23-24 accounts for the Pension Fund and the Council. I'm happy to answer any questions, or we can pass over to EY to give more granular detail on their particular reports. Thank you, Chair.
Thank you very much, James. Before we hand over to EY, were there any questions from colleagues on the committee, or do you want to keep your sort of what's the word, powder dry until we hear from EY in a bit more detail? Okay, I think over to you. Thank you, Stephen.
Thank you, Chair. So the first report that I'll turn to is our interim value for money report. As members will be aware, as part of our responsibilities as the Council's auditor, we're required to consider the arrangements in place in the authority for securing economy, efficiency and effectiveness in the use of resources. This report, as James indicated, summarises the results of our work in relation to 22-23. So I think as part of the discussion we had at the last audit committee, I explained that as part of the national reset, while the audit of financial statements wouldn't be going ahead, government's intention was that value for money work should continue and should be reported, and that discharges this obligation. The intention is that we will report this in final form when we're able to issue an opinion on the financial statements as part of our auditor's annual report, and that is likely to be in line, again, as James indicated, once government has issued guidance in relation to the national reset, which is expected to have a backstop date for 22-23 in prior years of September 24. So in completing the value for money work, we considered whether there was, and this is summarised on page 7 of my report, on whether there were any significant risks across the 3 reporting criteria in line with the Code of Audit Practice, and there were no significant risks identified. And similarly, I'm pleased to report there were no significant weaknesses identified in respect of value for money. I would, however, draw members' attention to our narrative in relation to financial sustainability, which commences on page 10, and the increasing financial challenges facing the authority, both in terms of the growing demand on services and therefore the increasing costs in the context of the external environment in which the authority is operating. As I note here, this will require continued focus by all members to ensure the continued financial sustainability and to ensure that robust financial position is maintained and the Council maintains a sufficient level of reserves to provide the necessary flexibility and what is going to be a continued difficult years ahead in the context of the outlook for public finances in the UK. So with those comments, Chair, I'm very happy to pause there, take the rest of the report as read and respond to any questions or observations on the report.
Thank you very much, Stephen. Councillor Nelson.
Thank you, Chair. I just want to seek some clarity on the dedicated school grants. It has a 23.5 million deficit brought forward from 2021-22. And at the bottom it said it's confirmed that no designated school grants funding was paid by the DFE for the Council in 2023-24 based on current reserve level forecast. Can you tell, I think it will be you, James, Andy, can you tell us where we're at with that and whether what agreement you have or anything come out from the government in regards to how this deficit is covered?
Sorry, yes, please, Andy. Thank you.
So on the dedicated schools grant, we still remain in discussions with the DFE about how we move forward with the safety valve agreement. As you've as reported there, the payments, the contributions we were due to receive from the DFE for 23-24 were not paid across, but we remain in dialogue, and so there's still some uncertainty about how that issues move forward, but we have a reporting timetable that the DFE has shared with us that we need to work with. There's a range of measures that we are continuing to implement as part of the operational plan that we've developed to sign off and manage those pressures in the DSG, so that continues. So at the moment the only real change in terms of the safety valve is the fact that we haven't received that contribution from the DFE. As I say, the matter is slightly more complicated because it cuts across both the DFE and DLUX, so I can't give you sort of firm conclusions and answers at the moment because we remain in dialogue with the DFE, but that's a summary of the position as things currently stand.
Thank you very much. Any other questions either for EY or for our colleagues from finance? I mean, obviously we note the concerns that you have identified here, and my understanding is that considerable work is underway to plan out a way forward. I think it would be perhaps useful to have a little bit more information on those plans and intentions, perhaps at the next committee, once we've got a clearer view of the outturn from the previous year. Any other comments or observations? Okay, then let's move forward. Thank you very much, Stephen.
Okay. The next report is the Pension Fund Provisional Audit Results Report, and so I'll hand over to my colleagues responsible for the Pension Fund Audit, Debbie and Calthema.
Thank you, Stephen. So thank you very much for making it possible for me to attend remotely. I had a bit of a diary challenge today with committees in different locations, so it's very much appreciated. So just by way of an overview, the pension fund audit is now substantially complete. We have highlighted a few outstanding areas, and I'll just talk these through with you briefly in a moment, but there's no significant issues arising from the audit, and we're therefore planning to be issuing an unqualified opinion. As Stephen has already highlighted, and James, we won't be able to do that until probably October, November time, but the work is substantially complete, and so there's no issues that we've got of concern. In terms of the outstanding areas, going concern, we have actually got the pension fund's assessment up to March 26, and therefore that gives us sufficient coverage of at least 12 months beyond the date of our expected audit report. So Calthema's been working through that. I need to undertake my review of that. I'll ask Calthema in a moment to just go through a little bit more detail on the membership data testing that we've done, because that is an area that's been a little bit more challenging this year, and we'd like to thank the Pension Fund team for their support in completing that. And then it's really just sort of final partner reviews that needs to be undertaken, and review of the final signed accounts and letter of representation. So on page 35 of the report, we have highlighted a few differences that we identified. So just run through those briefly. They're quite a low level of differences identified. The first of those is a 2.7 million difference, which is purely due to timing. So it's the fact that the accounts are produced based on an estimate of the asset values, and then at the time we come to do the audit, there's more up-to-date information. So that's reflected as an audit difference. There is also a misclassification point in relation to 4.3 million. We have flagged that, and we will see that in the plan for next year later on, that classification, particularly between sort of level 2 and 3, I think there is degree of judgment in there. So I think that's something we want to work with the pension fund for next year, to say, can we put something in place at an early process so that we can agree classifications before you actually produce the pension fund accounts. So we'll be having discussions around that. So it is, as I said, a judgment. And then there was an error on sort of fair value hierarchy as well, and there's some minor disclosure differences. So nothing that was a really key concern in terms of the differences that we identified. So I'll hand over to Calthema just to give you a little bit more detail on the membership data, and also just to talk you through some control areas of improvement in terms of controls that we flagged within the report. And there's 3 areas there that I'll let Calthema talk you through.
Thank you, Debbie. With regards to membership testing, so last year was a triennial year, so we needed to do membership data point testing. So we looked at the age, the gender, the classification, etc. So the outstanding information is just follow-up queries that we have with Hampshire with regards to that. It's only on 5 members which we identified differences on, so they're following up on that. It's not significant. All other differences has been resolved. And then the other is just the way membership numbers has been disclosed in the account. So there has been a change in the way we disclose it. So it's now per record and not removing all duplicates. So that has been amended in the financial statements, and that is to be more in line with the triannual report. So now the membership numbers as disclosed is exactly equal to what the triannual report, which makes a bit more sense than having to make all those adjustments. With regards to the control weaknesses, so they relate to the findings that we identified. So Debbie has spoken about the hierarchies and the observable input. So there is discussions between the current year audit team just to see how we can address those. The other one was the related party. So there were 2 members' declaration of interest which was not received at the time of the audit. It has since been received, and so we were just saying management should try and put controls in place that is received before the audit start. And then the other one was the membership numbers, which we have spoken to. So other than that, there's nothing else unless there's specific questions regarding them. Thanks, Debbie.
Thank you, Calthema. Yes, so happy to take any questions or comments on the report. As I said, I think a positive report overall with a relatively small number of differences identified.
Lovely. Thank you both very much indeed, and very satisfied, obviously, at the outcome and the results of that. Any comments or questions, colleagues, before? Thank you very much for the good work on that, and very happy with the result. Thank you both very much, and thank you for dialing in, Debbie. Shall we move on?
Thank you, Chair. The next paper, certainly in my pack, is the auditor's certificate in relation to the 21-22 audit. As James said, the actual opinion on those financial statements was signed in September 2023, but until the National Audit Office confirms that there's no further work required by an auditor in respect of the whole of government accounts process, we're unable to issue our audit certificate, which in effect closes the audit. So that is this certificate. It's a formality, but it's an important formality.
It is, and always good to see that completed. Well done to everyone involved from each side, all sides, in getting us to that point. Excellent work. Thank you.
Thank you, Chair. The next paper is the audit plan for the council audit for 23-24. Now, this is a provisional plan, and it's provisional for two reasons. One, you'll see within the opening statements within the plan that the plan has been developed in the context of the national reset, which government is proposing. And at this stage, while the consultation has been completed, as auditors, we've yet to receive any indication of what the policy will be and any guidance to support the government's intentions as a result of the conclusion of the consultation exercise. So therefore, what that means is we will need to potentially revisit this plan, and if there's any material amendments to it, we will of course report that back to the committee at a suitable opportunity. Secondly, we're also, while our planning work, scope and strategy is well advanced, we are in the process of finalising that, and again, if any matter should come to our attention which would impact the plan in a material way, as we always do, we'll report that to the committee. We set out on page 6 of the plan the information that James referred to in terms of the national reset and the three phases in terms of the reset, the recovery and the reform. Clearly the priority is the reset, which will be affected following the passing of legislation with a backstop date of September 24, and then the recovery period, which will seek to rebuild assurances over a period of years to put the local audit system on a sustainable footing. One of the things we do draw to committee's attention in this report, and I'll cover this before I hand over to Larissa just to pick up materiality and the significant audit risks which we'll be focusing on, is the responsibility of this committee in the context that you are those charged with governance for the council, and an audit cannot be completed or be completed successfully without there being a robust set of good quality draft financial statements, good quality working papers and sufficient resources in place to support an audit process. And one of the things that I'm doing in all the plans that I'm presenting is re-emphasising, in line with PSAA and the statement of responsibilities that places on audited bodies, drawing to committee's attention those responsibilities and posing the question to the committee: are you comfortable that you have sufficient arrangements in place to receive that type of assurance before we, as the external auditors, come in to complete the external audit? Very often, certainly over the last number of years, and again this is a general statement not referring to this authority, the external audit process very much has become a line of defence, and we should be sitting outside the lines of defence in an organisation, so things should be picked up before it comes to the external audit process. I'm very happy to take questions on that, but before I do, John, let me pass to Larissa, and I'll ask her just to pick up a summary of the key areas of audit focus and also our current judgment in relation to materiality.
Thank you very much. So I will give a brief overview of the risks we identified at this stage in the planning process. There haven't been significant changes in risk compared to our last audit, 21-22. However, I'll briefly summarize this. So the first risk we identified is misstatements due to fraud and error, and we have a range of procedures across the audit file that are designed to respond to this risk. And then we have a specific risk under that umbrella risk, which is risk of fraud in revenue and expenditure recognition through inappropriate capitalization of revenue expenditure. So in local government, this is a response to the practice note 10, which specifies that in the public sector we need to consider risk of fraud on expenditure as well as on revenue. And then we have the significant risk on valuation of land and buildings valued at current value, such as DRC and EUV. We historically have differences of specialist opinion in this area, and those who attended more committees will know that very well. And then the following risk is the derecognition of infrastructure assets upon subsequent expenditure or replacement. We downgraded this risk to inherent risk from significant in 21-22. We did not identify misstatements to report around the infrastructure accounting issue. However, we decided to keep this risk on our list and draw your attention to it due to the implications for the future arrangements that the Council needs to put in place to ensure the transition from the statutory instrument to the normal accounting for infrastructure assets. Then on the following page, on page 9, we have the inherent risk around pension liability valuation. This is not a new risk, and it's a recurring one. We also have an inherent risk around valuation of council dwellings. Due to the approach to valuation, we don't normally identify significant risk around that. However, there is still an element of judgment, so we recognize that through our inherent risk. And then to draw your attention to the new risk around IFRS 16 disclosures, it's important to emphasize that the new accounting standard for leases is effective from 24-25. However, according to accounting standards, the authority is required to disclose the impact the year before the standard is effective. So we've been in discussions with the council. We have shared a questionnaire to help with the impact assessment and preparedness for this new accounting standard. And we will be auditing the disclosures around the impact assessment, which we expect to be qualitative and quantitative in nature. And as Stephen already mentioned, if there are any changes as a result of completion of the planning process as well as the government announcement, we will inform you about that with regards to the risks. And then page 10 sets out our planning materiality. This is the materiality we use for planning purposes. And the largest materiality, we call it planning materiality. The level we set it at is consistent with 21-22 audit, which is 1.8% of gross expenditure. And we use the unaudited figures from 22-23 as a starting point. We will revise the materiality levels once we have the actuals for 23-24. And then moving on to performance materiality, this is the materiality we apply at account level, and we use it to select samples. And we see a drop in materiality from 75% in 21-22 to 50% in 23-24. This is primarily driven by the audit results from 21-22, both corrected and uncorrected audit differences. And we did take into account the fact that 22-23 isn't audited when setting this materiality level. So this we expect this to result in slightly larger sample sizes as impact on the audit. And then the lowest level of materiality, we haven't changed the basis or the level compared to 21-22. And happy to take any questions.
Thank you both very much indeed. Councillor Dennis.
Thank you. I'll just answer your point, Stephen, that you raised about, I suppose the question was what type of information do we find useful and how do we find useful trying to sort of interrogate the information before it gets to you guys to make sure that it's worthwhile. I suppose how I sort of view sort of our role on the committee is, in essence, I'm always interested in where you disagree with what our internal people do and where those disagreements are and what they mean. So, for example, Larissa sort of did talk about the disagreement in valuations of certain things around property and all that sort of stuff, and we have talked about that in the past. And while I don't offer an opinion on that. I'm quite comfortable that disagreement doesn't affect the fundamental financial reality of the council, which is obviously, as a local council, that's where I'm really interested in. The main risk that you identified, which essentially is level of service provision decreasing with the likelihood of funding not increasing to match the level of service provision, is something that we are very well aware of. Thankfully, Councillor Goddard gives us a very detailed talk when we do our council budget speech to all the challenges and what we need to do in the future. So as a risk, it's certainly something that we are aware of. So in essence, really what I look for is, where are the disagreements? And at the moment, my view is, and I might be completely wrong, but generally where there are disagreements, both our internal people and you guys are happy to have those in front of us at the committee if necessary, because they're not fundamentally, I think, existential disagreements that arise too much passion. I don't know if accountants do get passionate about disagreements. So really, I think from my priority, and on your reports you do like a nice conclusion line at the end of, where you think things are, and that's useful to someone like me who's not an accountant. So generally I'm quite happy with how information is presented, but ultimately the earlier disagreements can be, brought to us, then the more useful it is for us to interrogate what those disagreements really mean.
Thank you, Councillor Dennis. Councillor Batt first, then Councillor Goddard.
Thank you, Chair. Thank you for a comprehensive report. I'm definitely not an expert in accounting or audit, so it's a lot to take in. But just a very general question, two questions here. First is, when measuring our financial performance and when assessing the various risk factors, how do you determine the yardsticks used to measure this performance, or indeed the risk factors? And what are the key performance indicators that we use, and how do you set them? How do you set these measures? And how do we know, and how do the public know that they are fit for purpose? That's the first one. The second one, I echo my colleagues' sentiments, my Councillor Dennis's sentiments on the value of the reporting. I think it'd be really useful to get, especially for the purpose of this committee coming into it as a substitute, to have sort of more summarised, condensed version of the headline points, because there's certain sort of definitions in there which I don't really understand or know so much about. So I think having a sort of more layman's report would be quite useful.
Thank you very much indeed. Let's go. Andy, did you want to respond to the question, please?
Yeah, I guess I'll just respond, I think, more generally to the points that both Councillor Dennis and Councillor Batt have made. I think what's interesting, we've had a bit of debate, particularly on the materiality issue, and the importance of setting that in context in terms of what it means. I mean, members of the committee will recall that we've had quite a bit of debate and discussion here around valuations, some of the issues that have arisen from previous audits, and I think we've always been keen to reiterate, not dismissing the importance of those, but they don't actually impact on the council's actual bottom line, the general fund wider financial position. Quite often I think we find both ourselves and EY sort of we're caught in the middle of I guess discussions between two sets of valuers who have different opinions, as it might be difficult to understand, but there's quite a lot of grey areas in around evaluations, and particularly the way they're reported back in local government statement of accounts. I think there's a fundamental underlying issue to this as well, is hopefully when we get through the system reset, someone will grasp the long-standing issue of simplifying the statement of accounts that local government has to produce, so that the public can actually work out what's going on. And I'd go as far to argue that might have prevented some of the issues that we've seen around financial failure over the last 5-6 years if we'd had simpler accounts, and obviously underpinning that a more robust external audit system. So that's
I think that's a very fair set of observations there, to be honest. I'm going to turn to Councillor Goddard next, and then Councillor Bowles after that.
Thank you, Chairman. Stephen, we've got a meeting in the diary, I think, for 3 weeks' time, so I don't want to sort of rehearse that or second-guess anything that we may conclude. But really, as you might imagine, I'm sort of quite fixated at the moment in terms of where we are with the government reset, which is a subject of great concern to me. I think really one observation and two questions, if I may. First of all, the observation. It does seem to me that whilst I understand we've got to wait for the guidance from the government in terms of the form of opinions that the audit profession will be issuing, I fervently hope that we are going to be able to look at and discuss that audit opinion well in advance of the 30th of September next. I would hate to see a situation where we're, at the 11th hour, we're confronted with a situation that we can't do anything about. So I would really want to emphasise that to you. Secondly, a question. What struck me from what James said in his introductory comments, clearly the deadline for the 22-23 audit, if I can call it that, to be finalised is the 30th of September next. And whilst the deadline for the 23-24 accounts is May 25, I think I heard an ambition to complete the work by November of this year. I mean, from my perspective, the damage that a 22-23 opinion might do to us is mitigated if we can substitute a 23-24 audit fairly quickly. Is there any reason why we can't just finalise that and issue it at November 24? Okay, so that's question number one. The second question is whether actually we have the option to include some work on opening balances within the scope of the 23-24 audit, which would therefore mitigate the if you like, the rolling impact of not having done a 22-23 audit. So those are the two questions, please. Thank you.
Thank you, Stephen.
Thank you. You'll keep me right, Councillor, if I forget any of the questions. I'll try and take some notes, but let me turn to the first one first, which was the form of the opinion. You're quite correct that we are waiting on some form of guidance following the conclusion of the consultation exercise. For those members who participated in the round tables when the consultation exercise is launched, certainly on the consultation that I was on and my fellow partners were on different ones, then there was some degree of emphasis by DLUC and indeed I think by other system stakeholders on there to emphasise that if a disclaimer of opinion is being issued by an auditor as a result of a system reset, then the nature of the opinion and the reporting would make that absolutely clear to protect any risk of reputational damage to an authority. And I know that that's an area that's caused a number of, or certainly significant anxiety in a number of authorities. Clearly, for every opinion that an auditor issues, that needs to be tailored to the specific circumstances, and you can't use a boilerplate opinion. But nonetheless, I think the guidance and that early engagement, certainly from our perspective, will be very valuable. We do have another reporting mechanism, and that will be the audit results report that we will issue in September at the conclusion. And that, of course, is more free flow, and that's more linked to auditor judgment. There are certain aspects that we need to report in line with professional standards, but that will give the auditor much more freedom to be able to articulate the specific circumstances for each authority and what led to a disclaimer, if that is the outcome. So hopefully, Councillor, that deals with the form of opinion. Then, in terms of the 23-24 audit, then the date that we're working to, and which is set out within the plan, is that we will conclude the audit and report by November 24, so within this calendar year. My understanding is that, based on a hunch probably, is that for 23-24, while the backstop date in the consultation was May 25, there is a high likelihood that that may be brought forward to March 25 5 so that that does not impact the NHS reporting season, which was something government set out in their consultation that they wanted to protect the other priority sectors. So the reporting by November 24 for the 23-24 financial statements, I think will support the authority in moving back into a normal cycle much more quickly than some other authorities are able to do, because I recognise that the production and the support of an audit is one small part of officers' responsibilities, and quite soon after the audit is concluded, if the audit concludes around September, October time, it's right into budget setting and the focus on that right up until February and February Council, etc. So where an audit, and we've seen this over the last few years, clashes with those other priority areas, then that's not good for officers, for members, or indeed for auditors. So that's the intention in terms of the 23-24 and the deadline there. And then I think your final point was in relation to opening balances. It was. Yeah. So in a normal, if this was a corporate environment, one would expect that where a disclaimer of opinion is issued, then it would take 3 years for that disclaimer to roll out of the financial statements, because you would need to start to rebuild the assurances, particularly in relation to opening balances. So for the 23-24 financial statements, Chair, as auditor, we're not going to have assurance over those opening balances because there wasn't a 22-23. We are waiting on guidance again from FRC or DLUC or indeed the NEO around what their expectations are in terms of rebuilding that assurance of over opening balances. And specifically, one of the complexities in local government as compared to the corporate environment is reserves, and the complexity of a local authority's reserves because of the subdivision. In a corporate environment, you know, simplistically, the reserves are the balancing number. So if you audit everything else, you know the reserves number, whereas because of the subdivision of reserves in an authority, then that makes that much more difficult. But the intention is, and my intention is, that we will start to rebuild the assurances by completing a sensible amount of work on opening balances aligned to any guidance, with a view that within 2 to 3 years we can support the authority to get back to you know, what I would call a normal state of affairs.
Thank you very much indeed. Very clear answers. Councillor Bells.
Thank you, Chair. Just on the 23-24 audit strategy, the inherent risk, the new one, the IFRS 16, it says the council needs to ensure that it's prepared for the implementation of this standard. How prepared are we, and is it a lot of extra work that this causes?
It does cause a lot of extra work. IFRS 16 is bringing pretty much every single lease and embedded lease within service contracts onto the balance sheet, whereas currently they may not be on the balance sheet. So we have to go and assess all of our contracts to assess whether there's a lease in there and assess that lease to determine whether it needs to go on the balance sheet or not, bearing in mind that 99% probably will go on the balance sheet. So as Larissa said, she's given us a checklist as well, which is sort of a handy sort of tick box so we can go through and sort of make sure we're project managing that. Also, the team have gone out, they're talking to procurement, they've looked at all the contracts we've got, and now they're digging into the contracts in terms of assessing those. Because it's probably quite easy if you're saying, okay, we're leasing photocopiers, you can assess that, but if you're providing a service where that company might be using an asset as part of that service, what's called an embedded lease, then that's more tricky to actually dig out, are they using that asset solely for the council, so do we need to take it on board? So we're working with procurement and going through that process at the moment. So we're working through it, and we've got a plan, and we've identified all the items we need to check. We're now just sort of digging into those with the contract managers to assess the underlying contracts, to assess whether there's a lease in there that we need to think about.
So it shouldn't affect the September deadline that we're looking at?
It won't affect the September deadline because the September deadline is for 22-23. But it won't affect the November deadline, hopefully, either, because, yeah, we need to do that as a disclaimer. It doesn't go in the accounts, but it's a note. We have to make a note. We expect to put this amount of leases on the council's balance sheet in the following year. So,
thank you very much. Councillor Dennis.
Just following on from that, actually, one thing I didn't understand is what is the risk? So, i.e., there's an inherent risk, it's red. Obviously, I look at this and I go, oh, it's red, there's an inherent risk. So, what is the boom? Why is it red? Is it going to be? Are we going to collapse? Is the building going to fall over, or is there going to be? Is there just because it's useful to understand what that red really means, basically?
So that red is actually to draw attention that it's a new risk. An inherent risk is lower in gradation compared to a significant risk, and we normally identify inherent risks around new accounting standards that we expect to have an impact on a council's accounts, and that's the driver behind the risk identification.
So in our next report, if it's red, it'll be a significant risk. So if okay, but there's no boom at the moment, which is good. Okay, thank you.
It's a very fair question. I was going to ask whether the red meant that we ought to be a little bit more concerned than I felt we should be. So a very fair question. I've got a couple of questions, if I may, as well. First one is just the context for me. Obviously, we've spoken a little bit about the reset and the consequence of that for the 2022-23 accounts. Do we have a view as to roughly how many other authorities are in the same sort of situation and position that we're in? Is it like 80%? Is it 90%? It's pretty high, I think, isn't it?
Yeah, so, Chair, September 23, which was the traditional deadline, I think from memory there was something like 960 opinions outstanding across local government in England, so that was the size of the backlog. And that's what, in the July before that, triggered government to say this is something that we need to address. I understand around now there remains about 640 opinions or thereabouts outstanding. So some progress made, but clearly, and the point of the reset is that an incremental approach to addressing this is never going to work because more keeps getting added on. And there isn't the resources within the system to be able to tackle the backlog on an incremental basis. So if we think 640 at this point in time, if I was to take a rough guess, I'd probably say 500 opinions possibly. It very much depends the other commitments of auditors across the system and the ability of finance teams to support those outstanding audits and whether there's any particular technical issues pertinent to a particular authority which are impacting the progress.
Okay, thank you very much for that. You sort of have posed a general question for us. I'm guessing, yeah, that sounds better. You posed a general question for us at the very beginning, and I think I probably need to turn to Andy to help answer that question. Andy, it was about the ability of the team to resource from outside the necessary work that then allows the external audit to take place according to the planned timetable. How comfortable are we that we've done what we need to do so far and we've got the resources in place over the time period to enable the November delivery?
Yeah, thank you, Chair. I think we are fortunate to have a relatively stable team, obviously that James heads up, that deals with the statement of accounts. We have reinforced the team over the last 12 months in terms of developing more of a succession strategy within the team. So we've got a couple of apprentices now working within that team to reinforce it and do some of the more sort of administrative type tasks that support this process. It's quite a lengthy process. I guess alongside that, we work closely with our colleagues from EY in terms of what can we do to get ahead of the timetable, the preparatory work, the work before the EY officers actually come into the building. And obviously with new systems and processes, there are a few things we can do to streamline the process, share data between ourselves that streamline the amount of work that we need to do within that overarching process. So again, obviously we're in a challenging recruitment market, so we have to be mindful of that, and I have to take responsibility for managing the workforce, ensuring that we're mindful of those challenges and we retain our best staff and develop the staff we have in the team to ensure that we can respond to the challenges in this area. But I'm as confident as I can be within that context.
Thank you, Andy. I feel fairly assured, based upon the response. No, not being flippant at all. The sort of target date of November. I like the sound of that. It sounds much better to me than May 2025. But genuinely, how realistic do you feel that is, bearing in mind the challenges we've had over the last couple of years in terms of hitting the sort of planned deadline?
That's probably the most difficult question you've posed, Chair. You know, I'm as confident as I can be, as Andy and James said. You know, we've got good engagement. We've started the 23-24 audit. You know, we have a plan that's here based on you know, advanced planning work. It's not complete yet, and we'll update it as I said. We're getting good engagement. You know, some challenges around data, but we're working through those constructively with officers. So I'm as confident as I can be at this point in time. But as always, it's not until you get into the weeds that when issues start to emerge. But I think we're in almost as good a position as we could be at this point in time for the audit, and we have an agreed plan and an agreed way of working.
Thank you very much. We've heard a little bit about resourcing from officer side. I suppose we haven't mentioned it yet so far, so I'll mention it for the first time. The fee, does that enable you to throw additional resources at this work from your end, or is the fee, you know, associated simply with the additional complexities of doing the existing job?
Yeah, as you'll know, Chair, we're not responsible for setting the fee. The fee is set by PSAA, and that was determined as a result of the last competitive tendering exercise where PSAA put the whole market out to tender. I can confirm that in terms of the resourcing, that we have designed a team to respond to the risk of the authority, including the necessary specialists to provide. And I guess one thing you'll be concerned about as an audit committee is the robustness of the opinion, and we've put in place a team that's going to support a robust opinion and enable me to sign that in November.
Thank you very much, Stephen. Colleagues, any other follow-on questions? Councillor Chandler.
Thank you, Chair. I'll just echo the Chair that he's feeling that we've got a pretty robust plan on our side. So in our August meeting, I'm hoping to have an update on how far we are away, because that'll be 3 months away from you signing off the accounts, wouldn't it?
Chair, through you.
Please, Stephen, sorry.
Yeah. I'm very happy. You know, I'm guessing management will want to lead. As I always say, the audit comes at the back of the process. It's the financial statement preparation and then the audit process. So I'm very happy for us to work with James to provide that update report in terms of the audit, and management can provide the update report in terms of the production of the financial statements at that point in time.
Thank you very much indeed. Okay. Is there anything, the next paper, if that's one of yours now as well? I thought so. I didn't think we were quite there. Far away.
But thankfully, Chair, you don't have to listen to me anymore. I'm going to hand over to Debbie and Calthema to present this plan.
Thank you. Thank you, Debbie.
Thank you. Thanks, Stephen. Thank you, Chair. I'll keep this all fairly brief. I think it's a little bit more straightforward than the council position. So you've got before you today our outline plan for the 23-24 audit. It's outlined because of the fact we haven't yet fully concluded all of our planning procedures, because obviously we're still concluding the 22-23 audit. However, we've based the plan on our experience of auditing both your pension fund but also pension funds more generally within the public sector. So what I'll do is I'll just take you through the risks fairly briefly. So they're on page 6 of our report. And basically they've set out a number of key risk areas, so very similar to the main council, that we have a general risk of misstatement due to fraud and error, which is required by ISA 240. There is a slight change to that risk focus, because in the previous year we linked that risk to incorrect posting of journals related to asset values and also investment income. We've concluded that actually the manipulation of investment income is the more likely area now, because there's so much triangulation for the valuation. So you have a custodian report and a fund manager's report, and we basically reconcile the figures in your accounts to those two independent sources. So the opportunity to manipulate the actual asset values at year end is very low, and therefore we've removed that list that risk from the asset values and just linked it to the in-year income now. We continue to have the same risk as in previous years around the valuation of the complex level 3 investments. So they're harder to value, they're highly material for the pension fund, and so we always identify those as a higher risk. So they're in there as a significant risk again. We've then increased our risk around just that classification point that we talked about when we talked about the audit results report between level 2 and level 3 investments because of that increased judgment. And so as we said, we're going to be doing some early work with the pension fund in that area. And then in relation to ISA 26, so that's the actuarial disclosures within the pension fund accounts, that is an estimate. Again, they're highly material figures that feed into those disclosures, and therefore we always identify those as a higher inherent risk and engage specialist actuaries from our own perspective to assist on that work. In terms of opinion, materiality for the opinion, so we set our plan of materiality at 1.81% again of the net assets. That's the highest level we can set for public sector pension funds, so we set that at the maximum level. And then we've set our performance materiality, which Larissa has already explained to you on the council's perspective. We set that at 75% for the pension fund, and that reflects the fact that there were a relatively small number of errors. So although some of them were larger in value, they were quite specific in nature, so we don't feel there's a higher risk of error in relation to the financial statements. So I don't think there's really very much different to say. I mean, Stephen has already talked about the council's responsibilities in terms of producing the accounts and supporting working papers, so the same principles apply to the pension fund, but I obviously won't go through those again. The only other thing to note is that actually we've got a change in manager for the 23-4 audit, so Kathleen will no longer be your manager, but Ruth Plucknett will be. Unfortunately, Ruth couldn't come to the committee tonight, but Ruth will, I'm sure, attend a future meeting as required. So hopefully it's a fairly straightforward plan, but I'm very happy to take any questions or comments on that.
Thank you very much, Debbie, and obviously thank you very much for all your hard work with us so far today on this. We'll be sorry to see you go. Any questions, any observations or comments? It was fairly straightforward briefing and a straightforward plan from my perspective, so thank you very much. No questions. Good luck.
Thank you.
Good luck. Thank you very much indeed. Thank you very much, colleagues. And we'll see you next time. Thank you. Let's move on in the agenda then to agenda item 6, the Internal Audit Annual Report for 23-24. Claire.
Thank you. So here to present the Internal Audit Annual Report for 23-24. This is actually brought forward from the August meeting. We normally present it in August. This is because it's used as one of the sources of evidence for the annual governance statement, which we're currently drafting, currently pulling together, which is why I brought it forward so we can get that completed earlier in the year. In total, we had 47 pieces of internal audit work fully delivered as part of the 23-24 internal audit plan, and field work for all planned work was completed by the year end, which is a fantastic result given the sort of vacancies we started the year with, and also the fact that we've had a really new team and junior team, getting them up to speed with the council and with the audits. Within those 47 pieces of work, 33 were assurance reviews, 7 consultancy and 7 grant claims. We also had 6 planned audit reports out in draft at the year end. These will be reflected within the current year progress report, so you'll see them in the next paper. And these are also will be taken forward and used as part of next year's annual Head of Internal Audit opinion, but these significant findings were taken into consideration as part of this annual opinion. Of the 33 assurance reviews that were completed in the year, 21% were substantial, 42% reasonable and 36% limited. That was actually a significant increase from the prior year, but we didn't have any no assurance reports finalised at the year end. You can see the detail of all of these reports within Appendix A of the report. Overall, for 23-24, we've given an opinion of limited assurance over the system of internal control and the governance arrangements for the year. This is based on the assurance reviews completed throughout the year, but also takes into consideration the scope of each review that was completed. So in some areas in particular, rather than looking at a compliance-based audit, we did a lot of work this year looking at those high-risk areas and looking at the action plans that they completed. So although it wasn't particularly looking at the risk areas, it was looking at the action plans that they have to get out of those risk areas. It also takes into consideration any significant findings from the draft reports, as I mentioned, and also the advisory reviews that we completed into some of those high-risk areas. And it also takes into consideration the wider knowledge of the organisation. In particular, so several areas of the limited assurance reviews were actually in key areas of governance, for instance, the risk management, workforce planning and facilities management, and this was taken into consideration. Common themes coming out of our work from 23-24 was around inconsistent governance arrangements impacted by the significant transformation work ongoing. So there's quite a lot of change going on across the council, and you'd expect that to have an impact on sort of day-to-day governance arrangements. There was also findings raised in relation to poor data quality, in particular due to reliance on manual records and outdated systems that were no longer fit for purpose. And these are elements that the council is already looking to address in 24-25 around those data quality. Also included in the annual report is an update on the follow-up of recommendations as at the year end, but we do include more updated figures within our progress report, so I won't go into those, and also the performance against our key performance indicators at the year end. And again, these are included in our progress report, which is our next agenda item. That was all I was going to say on the annual report, unless there's any questions.
Thank you very much, Claire. Colleagues, any questions for Claire? Councillor Dennis.
The very obvious question, what's going to happen to move us up from limited? I mean, because obviously you don't really want to be at limited. It's great to know that we're at limited, if that's your opinion, and there's obviously areas that you pointed out that we need to improve on. But what's the plan to move us up to the next level?
So I know that a lot of the work is already going on in terms of data quality, in terms of governance arrangements. So a lot of the reviews we have in the plan for next year are to look in more detail into some of those areas and make sure that we have, do those reviews early on in the year so that they have time to implement some of the recommendations that come out of that, or we expect to come out. Haven't done the work yet. But yeah, so probably in terms of making sure that we're embedding any recommendations that we raise, because things can be limited assurance in terms of individual reports, but if all of those actions are completed through our follow-up process by the year end, and obviously we take that into consideration. So it's not a kind of, you've got a limited assurance report, that means it's going to be limited annual opinion. It's looking at, okay, what sort of recommendations have we raised and what sort of actions being taken to implement them. There is a lot of transformation work going on, and I think that will really help this year, assuming it all works out fine.
Thank you very much indeed. Councillor Goddard.
Thank you, Chairman. Just a couple of points, if I could make. I mean, first of all, I think we should be congratulating Claire and the team because really it's been a total rebuild task. 12 months ago, 18 months ago, we didn't have an internal audit team of our own. We were dependent on outsourcing, and so I think it's fantastic that we've managed to achieve so many audits. If I may just comment, I think Claire's observations about governance and the way that's been disrupted, if I can call it that, by the transformation efforts, I think that's absolutely right. That's not in any sense complacency, but I think that it's inevitable that when you bring about change, it's going to take a while for the governments to settle down. I think it's widely accepted as well that there is a need for us to be a lot slicker, a lot more precise, a lot more nimble and able in terms of the way we use data. And Andy, I'm sure you'd agree that we are making investments that will allow that to happen. So definitely, certainly 36% limited is a subject for concern, but I think in the current context it's not particularly surprising.
Thank you very much, Councillor Goddard. Councillor Chandler.
Thank you, Chair. Yes, I echo Councillor Goddard's comments, and thank you, Claire, for the hard work you've done for the past year. We've talked quite a few times in our previous meetings about the new data system that you had, and that relates to limited assurances, so that when they're putting their action plans in place, how's that working out? Is it working as well as we would have anticipated?
So in terms of our sort of follow-up tracker, yeah, it is. It's still, we are getting better responses for our more recent reports because we are following them up quicker. I think previously we had quite a backlog to work through, and obviously with a lot of change happening, a lot of roles change, a lot of people leave, recommendations don't get handed over, but with the more recent reports we are following them up quicker, so we are getting a better response rate on that. It's working. We are having a lot of meetings to sort of chase people up on those, and we are clearing that backlog. I think it's working. It's working fine, better.
Thank you very much. Andy.
Yes, thanks, Chair. I just wanted to add a couple of points to what's already been said, really, just to put it on record. And thanks to Claire and the team for delivering at speed. As I think Councillor Goddard mentioned, we were in a situation, as this committee knows, where we were dependent on external a contract for our audit service, and that was not a comfortable place to be or a good place to be for the organisation, and Claire's come in and turned that round at speed and with effect. And limited assurance, on the face of it, is not always a good place to be, but it's a recognition. It recognises, I think, that audit are doing their work correctly and identifying areas for improvement, so I think that's worth mentioning. I think also what we're doing and trying to do is we're pushing audit and our fraud teams into areas of the council they previously might not have been involved in. They're adding their specific skill sets to the transformation programme and projects, such as our own Oracle project, and other projects which are less obvious, so helping some of those change processes work effectively and improve some of those processes. And I think we'll get onto risk management shortly, but that underpins the review of that area, underpins the programme going forward and should in fact drive those priority areas. I'm sure Claire will comment on that specifically shortly, but also worth pointing out that the council has committed to investing 10 million in terms of its digital programme and improving some of those systems where we have some current challenges. Some of that will take a while to materialise, but in the short term we're looking for some shorter term, more rapid fixes to deal with some of those challenges.
Thank you very much, Andy. I think to sum up from my perspective, I'll repeat the message that is coming through loud and clear. A terrific year, considering where you started the year and where the audit service was at the start of the year in terms of resourcing. You've delivered more work than we've had in previous years. You've, I think, delivered more rigorous internal audit work, but inevitably, because it digs a little bit deeper into higher risk areas of governance, risk and control, inevitably some of it will come out as a limited. So I don't see that as a particular concern. I see it more as a reflection of the better quality internal auditing that's happened over the last 12 months. So keep up the good work. Hopefully we'll see the actions implemented to fix some of the things that have come up during the work, and hopefully as risk management beds down over the next year, 2 years, we'll see a reduction in some of the limiteds in the future. We'll see. Good report, very short, very succinct, very clearly written. I'd have quite liked to table with the end of year KPI position on, maybe something to think about for next time, but no deal breaker there. Unless there's any other comments, thank you very much indeed. Congratulations to the team on an excellent year's work. Keep up the good work. Thank you. I feel assured. All right. let's move on to your next report, Claire, the Internal Audit Progress Report. Thank you.
Thank you. So this is a progress report showing the work completed since the last Audit Committee meeting. Obviously, a lot of this feeds into the annual report, as we're only 1 month into the year. So we completed 9 reviews since the last Audit Committee, and many of those, like I say, are included in the annual report. 1 substantial relating to building safety standards, 4 reasonable, 1 advisory piece looking at fraud risk assessment in procurement, and 3 limited relating to social housing applications, fleet damage and pool cars. Of those 3 limited assurance reports, very similar to what we previously talked about, the sort of key findings related to missing key documentation due to a reliance on manual processes, duplicate systems, so multiple systems, recording information, and sort of insufficient checks and challenge within the different services. We also had 7 reports out in draft at the year end, which are included within our appendix. This is in Appendix A. It also outlines all of the planned work, currently planned work for the remainder of the year. Currently we are focusing on finalising those draft reports, and we have already started work on quite a lot of the 24-25 internal audit plan, so we're already ahead of where we were last year. Included in the end is the KPIs, and as you were asked for a breakdown of the KPIs at the end of last year, I have included last year's figures against the current year status. Obviously we're only 1 month into the year, so there isn't much to report. We have started planning for all our audits 6 weeks in advance, but we haven't got any draft reports out in relation to the 24-25 plan yet. The only other thing that I really wanted to mention on the internal audit side was we are currently working on our sort of quality improvement action plan. So I mentioned at the last audit committee around the new internal audit standards coming out. We are going to do a sort of gap analysis assessment against this. There are increased requirements for the audit committee, so I shall make sure to present those to you at the next meeting so that we can make sure that they're all embedded before those standards come in. So they come in terms of the global internal audit standards in January of 25 for the public sector. The kind of specific guidance comes in for end of March next year. And that was all I was going to say on the progress report.
Thank you very much indeed. Any questions or comments, colleagues? Okay. Just 1 or 2 from me then, if I may. The substantial assurance, normally I plunge straight into the limiteds, but I'm going to go for the, turn things on its head today. The substantial assurance report on building safety standards. Very briefly, what was the kind of scope of this one?
So this was looking at the action plan that they have in place around ensuring compliance with the building safety standards. So it's not giving assurance that we are, substantially compliant with those standards. It's looking at the action plan around it.
Okay, thank you very much indeed. All right then, pool cars. Tell me a little bit more about pool cars then. I've done the sweetening things up, and now we'll go to that one.
So pool cars, it was an area that we were asked to look at by the head of service for that area because of some sort of concerns around the processes. It relied a lot on individual officers completing the sort of documentation, so completing their consent to drive forms and getting those signed off before they take a pool car. And also filling in paperwork, so filling in, like, if you're going to get a hire car and fill out the damage assessment. Obviously, when we were looking at it, we were testing whether or not those were completed, and there was quite a lot of weaknesses found with that documentation because it is very heavily reliant on individual officers doing it. There were things like damage being recorded on one day but not the day afterwards, which kind of suggests the person the day afterwards hadn't really done it, or damage magically jumped from one side of the car to the other when people were recording it incorrectly. So it was just sort of weaknesses around that documentation and people checking it and making sure it was completed.
Thank you. And has there been progress made on fixing that since the audit? I appreciate the audit's only recently completed.
My understanding is that there has been discussion around the changes. I haven't checked the follow-up.
No problem, thank you. On page 4, you talk about changes to the internal audit work plan. I see stuff dropping off. What's replaced it?
So for most things, it's actually just postponed into this year's plan, so it's more taking it out of the 23-24 plan and just delaying it. So this tends to happen around year end, where everybody seems to get busy with everything, and internal audit is the last thing people want to see. So we tend to move things into quarter one. So things like the personal appraisals, overtime payments, partnership working is all still happening. It's just the sort of timing didn't work. In particular, personal appraisals, overtime payments, there was a lot of work going on with external audit looking at HR, so, you know, we don't want to get in the way of them. So yeah, we pushed those back. It's all still happening though.
All right, lovely, thank you. Page 10, if I may, just on the sort of follow-up bit. Table's really clear, no real concerns there. The capital programme one, 23.P02. We've got 1 and 2, one high action, one medium one, but kind of unknown status. Have you had a sort of response from them since the papers were produced?
Not that I'm aware of. I could find out and I'll let you know after the meeting.
It's more a case of, you know, should we be concerned? Are we chasing them? Are they getting
so
on with fixing this?
Yeah, so we will be chasing all of those that are unknowns to make sure that we have meetings to make sure we get an update for the next audit committee meeting. So I'm not concerned around those.
Lovely, thank you very much indeed. Okay, we'll move on to the next agenda item, which is the Risk Management Annual Report for 23-24. Over to you, Claire.
Thank you. So yes, this is the Risk Management Annual Report. This provides a summary of the risk management work that was completed during 23-24. Again, we've brought it forward from the August meeting. It includes a summary of the risk register at the year end. Now, in terms of the summary, this is very much what we presented throughout the year through our risk management reports. So there shouldn't be any sort of major surprises within there. At the year end, we had 16 red-rated risks. This is what makes up our corporate risk register. So all of the big significant risks to the organisation, and they are outlined in Appendix A. You'll see I've included a breakdown going from the end of last year all the way through the year with the different quarterly changes. There was a significant change at the beginning of the year when we did the big refresh of the corporate risk register. And as we are moving to a new risk management system, I'm expecting there to be further changes, potentially more risks added as we are going around and making sure risk management is more embedded within the services. As was presented at the last audit committee, Place still has the highest numbers of risks. This does not mean they are the most risky directorate. It is just that they have collated all of their different service level risk registers into one area, so onto our Excel spreadsheet. They have all now been moved onto the new risk management system, JCAD, and they've already started using that and making sure they're updated. They've set themselves a deadline of the end of May to get all of their risks reviewed on there. Many of those are low scoring, so it's not a concern. We had 13 unscored risks at the year end, down from 24 in quarter 3. Again, a majority of these are with Place and they're working through those. We also had 5 risks that had not been reviewed within the last 6 months at the year end. That was 3 medium and 2 low. These are all raised at the corporate risk management group at the end of the year, and they are being addressed and looked into already. In terms of the new risk management system, so we have had, the system is now set up and good to go. There was going to be a update on the 2nd of May, just a standard national update to the system, but we are already using it within the Place Directorate. They've had a demo. The Finance Directorate and also the Digital Directorate have all had sort of a demo session to talk them through the system. And we have requests in to complete demos within children's, adults and central services. once they've sort of had that demo session, the things that are still outstanding is around the training and the guidance to go with them. So we're not we're letting them loose on it if they are particularly enthusiastic, which is really great when people are, but I'm not pushing it too much while we're still sort of making sure that everything's ready and there's guidance and support available for people as they use it. And that was all I was going to say on the annual report.
Thank you very much once again. Colleagues, any questions or comments on this? One or two for me then. On page 5 of your report, where we've got the number of risks by directorate, obviously it's early days in terms of embedding the new or the revised approach and using the new software package. I mean, when I look at digital, I kind of get the feeling that there's probably more risks in digital than I'm seeing on this chart from not close to the action. What are we going to do to try to enhance consistency across the authority?
So this is one of the reasons why I'm not transferring stuff straight from our Excel spreadsheet into JCAD to so we're focusing more on running training sessions within individual services to make sure that they are reflecting on all of their risks in that individual service. Because currently within a lot of our directorates, including digital, things are recorded at a very high level. So we'd have like one, giant risk around cybersecurity, but actually you could break it down into a lot of different elements. So I know previously we've talked about all the fraud risks and looking at how we're breaking that down, and Alex, and I'm sure he'll talk about this in his paper, is already looking at splitting out all the different fraud risks across all the different service areas, which will lead to a big increase in the number of risks on there. Similar with digital, and similarly with finance, so working with the different finance services to make sure that we're recording sort of granular level risks. It will lead to a big increase.
Yeah, inevitably, but thank you for that. On page 6, you talk about the forward plan and the aspiration to move to a risk-defined level of maturity, something we've heard about for the last 6 years or so. Do we have a slightly more, or are we intending to develop a slightly more sort of formal plan to try to achieve that with sort of objectives and milestones and things like that, or is it still sort of somewhat intangible?
I mean, in terms of aligning to that, it's probably more intangible. My focus currently is very much on getting risks recorded on the risk register. We are looking at things like the KPIs, so the number of risks that haven't been updated, the number of sort of risks overdue for review, actions overdue for review. Within the new system, there's a lot of options. We are also working with the digital team and the business intelligence team of how we can take that KPI information and embed it more within the corporate dashboard and performance monitoring. All of those kind of will feed into this, but I would say it's more of a culture change that has to happen first, which is quite a hard thing to have an action plan around.
One of the hardest things indeed. All right. Councillor Nelson, thank you.
Thank you, Chair. Claire, thank you. It's quite an in-depth report. Some things that bubble in my head anyway. On page 6, you got the analysis of corporate risk register. And you've got some brought forward from 2023-24. But there's a number of new corporate risk 2023-24, 13. Can you explain to me what that is all about, please?
Yes, so the breakdown is on the following page. So we break down on page 7, that lists out all of the corporate risks. So the first column shows the year-end position. So those top ones from Heathrow expansion down to inflation was the ones we started the year with, and then at the end of quarter 1 moving into quarter 2 we had quite a big refresh. So you'll see all the ones from community doles down to ability to deliver a balanced budget were all new ones that we added within quarter 2, and we've also added a further 3 at the end of Q4 in relation to decent homes, decarbonisation and home to school transport.
So that will be rolled out as you go along. You will be able to pick up on those as we move on in the risk sector.
Yeah, so when we do our progress report, our risk management report to each audit committee, we list out all the new ones that have been added since the last audit committee meeting. So yeah, you'll see those as new risks get added or new ones get taken away throughout the year.
Thank you very much. Okay. If there's no other questions, we'll move on. Thank you very much indeed. Last but not least from you, agenda item 9, the strategic risk report.
Yep, Alex is jumping ahead there.
I apologise.
Sorry. So the final paper is just the strategic risk report. So we introduced this at the last audit committee meeting. There has been no significant changes since the last meeting. It is fairly consistent. These risks have now been added to JCAD as well, and I am getting the members of CMT trained up in terms of looking at it. And as I said before, we are working with digital and business intelligence to incorporate those KPIs both ways, so making sure that the risk KPIs are within the dashboard and also the other service level KPIs are embedded within this.
Thank you very much indeed. Again, any questions? Okay, thank you very much, and thank you very much for delivering all of those reports one after the other. Look, I know he's eager, so we better move on to agenda item 10, where we'll hear from Alex and the Counter Fraud Progress Report for Q4 23-24. Thank you.
Thank you, Chair. Sorry, I've been quiet for so long. I tried to jump in too early. Yes, I'd like to take the committee through the Counter Fraud Progress Report for Q4, which is found on page 233 of your packs. First of all, apologies to the committee. I've issued an addendum yesterday, which I believe you all now have, for Appendix B on page 243. The team has continued to focus its efforts in areas of high risk, which is predominantly around frontline demand-led services. The proactive and reactive activity undertaken during Q4 has led to circa £2 million in savings, bringing the year-to-date total, or close of the year, to 11.2 million. In the area of housing, the team has focused its activity around tenancy fraud across all tenures. For council tenures, we have brought back a further 23 properties in Q4, bringing the year-to-date total to 103. And we've also closed 16 emergency accommodation units from homelessness due to non-occupation, bringing the year total to 42. And both the year-end figures, 103 and 42, are the highest that we've ever achieved in a single year. Our work streams and revenues to maximise income has continued, and we've identified 8 businesses that are undeclared for rates. And we've also identified 30 beds in sheds that weren't listed for council tax, which equates to about £543,000 of income. Moving forward, as Claire's already mentioned, one of our key priorities is to refresh the fraud risk register. We're in the midst of that as we speak. We're then going to go out to SMTs across the directorates to agree those risks and then move to a position where it will be service-led with the new JCAD system that Claire has implemented. Another one of our sort of key priorities for the financial year is to embark on quite a large fraud awareness campaign. This is going to start in adult social care. So these sessions will highlight fraud risks and provide staff with the tools to spot fraud and report it. And I'm hoping this is going to be the catalyst for us to increase our activity in this area as we go out throughout the financial year. So as another really important part moving forward is for us to sustain our performance from last year into this year and how we managed to do that. And lastly, quite a large task for me is, as agreed at the last audit committee, is to move from a very heavy narrative progress report to dashboard reporting. And now we have tools such as Power BI, so we'll be moving to much less narrative and more charts, which I'm sure will please the committee and also CMT.
Thank you very much indeed. Councillor Batt.
Thank you, Chair. Thanks, Alex, for the report. I can see that there's quite a few statistics on loss prevention savings. I'm just wondering if there's any data to assess what the extent of our liabilities or losses are as a result of fraud or cyber fraud activity.
it's quite difficult to try and put an overall figure on what we don't know, shall we say. So there is a rule of thumb that is commonly used across the public sector, but it is quite wide, and they say that if you take a budget, there could be anything between 0.5 and 5% of fraud or loss within a budget. So that's kind of a going theme. We obviously find out a little bit more in terms of our activity as we're going through, like proactive activity or anything that Claire may spot in terms of process weaknesses. But in terms of actually trying to quantify how much is still out there or what we don't know about, it's really difficult to say.
Unknown unknowns. All right. Any other questions, colleagues? Oh, sorry. Councillor Goddard, sorry.
Yeah, thank you, Chairman. Well, first of all, Alex, you've heard this from me a great deal already, but congratulations on a fantastic result for the year. I mean, you know, to be generating £11.2 million worth of savings is a magnificent achievement, and I think it's worthwhile just sharing with colleagues that actually I think Alex's team is at the moment, and I emphasise at the moment, the largest contributor to the increase in our housing stock, which is a pretty important thing. I think it maybe it's a reflection of the world that we live in, that we're seeing such high levels that you guys are detecting. But I think the most encouraging thing to me is that, as I understand it, that you and Claire are working closely together, and that we are actually taking the results of the fraud discoveries that you are making and are translating those as much as we can into controls that stop repetition. Although it has to be said, in some instances, that's particularly in housing, I think that's a very difficult thing to achieve. Thank you.
Thank you very much. A couple of observations for me. I'm not a fan of odd numbers, so 11 million. 12 would have been nice, I suppose. No,
it would have looked too similar to last year's, you see, John. The auditors might have raised questions.
Yeah, indeed. Congratulations to you and the team. I thought it was a short, succinct report this time before we even move to the dashboards that you're wanting to move to for next time. Excellent work, as we've said throughout the year. A big well done to the team. Please pass that on from the committee as a whole. One thing I did want to ask, are you giving another team from somewhere else the opportunity to win the SIPFA Awards this year? Or are you going to throw your hat into the ring one more time? I think maybe give someone else a chance, perhaps.
Yeah, I think going back for the SIPFA Awards, I'm not sure that a counter-fraud team, same team has won it 2 years on the bounce. So, I've made the conscious decision at the moment not to apply for this year's. However, there are some other awards, shall we say, that are nationally recognised that I may or may not apply to, which I'll have further discussions with Councillor Goddard and Andy about.
I think the committee would strongly encourage the consideration of putting yourselves forward for whatever other rewards exist in this area. Congratulations on a very successful year to you all. Councillor Nelson.
Item 3.2.1. It's detailed. It said a total. 3.2.2. In the fourth quarter, it identified that there's unlisted property made up of bed in the shed. How much of that have you dealt with? Because it's a big thing that's happening around the borough now that we're all fully aware of. How are you, in regards to how are you dealing with that?
So if you look back at our sort of results over the year, and you'll see the annual report, we've brought in more beds and sheds this year than any other year. I think we brought in 72. So there's different elements to beds and sheds. So obviously from the counter fraud perspective and the interest from us, it's purely revenues in terms of a counter tax base and it being brought into counter tax. There are other teams that have interest in beds and sheds. So you have private sector housing, you have planning enforcement. What I can say is that we are all working together. We had a list of properties that we jointly visit, and we have regular sort of enforcement meetings around all these properties. So there is a sort of plan and a project to take it forward. And I've got some ideas that I need to have some further discussions with Andy about how we can move that even further forward.
Thank you very much. Okay, let's move on. Back to you again, Alex, for agenda item 11, the annual operational plan for 24-25.
Thanks, Chair. So I'd like to have the committee through the annual operational work plan for 24-25, which starts on page 249 of your packs. So the main body of the report is pretty much the same as what I brought last year. It just gives the committee a background to how the team operates, including its strategic approach and operational functions, and how we're sort of aligned to internal audit and how we work together. Appendix A, I have refreshed the fraud risks faced by the council. I haven't added much, if I'm honest. It's quite similar to last year's and the years before. The landscape hasn't particularly changed. And Appendix B also sets out the actual operational work plan for the service. So a couple of points on this. It does focus around the three main sort of frontline service areas of the council, so revenue, social care and housing. It is aligned to, you'll see there's some synergies between what Claire's doing from internal audit. That's because, going back to Councillor Goddard's point, Claire and I are talking about risk all the time. I'm sure people would get sick of us talking about risk, the amount we do. So they are aligned, and we are sharing resources as well where appropriate. I think the big sort of key message to get out from the plan moving into 24-25, and I think the committee will see more of this into Q2 and Q3, is ramping up our activity in social care. So the catalyst, like I said before, is about us going in and sort of having them fraud awareness discussions. We're already having them high-level discussions with key stakeholders. Claire and I are going to do some consultancy work in the coming weeks for us to understand a bit more about the risks in the areas, and then how counter-fraud can support the services to avoid, obviously, loss. So that's probably the biggest ticket item and the difference you'll see going forward.
I'm very heartened to hear that. You know, it's an area that has concerned me in recent sort of months, years. So be interesting to see how that pans out, actually. Colleagues, any further comments? Councillor Dennis.
Just a question around how you do something like that, because obviously if you're going to focus more on social care, which is obviously a higher expenditure area, so greatly to look at, but there's obviously a certain level of expertise and decisions are made for certain reasons within that area, and obviously as a generous sort of counter-fraud team, how do you make sure you can understand an area which is technical like that in order to be able to try and work out where the fraud is happening?
Yep, so I think I completely agree with what you're saying. We're not the experts in the field at all. So there's a few things. There's the stakeholder engagement with the experts at a senior level, the fraud awareness, which will bring out the expertise on a ground level and for us to understand the risks. And then there's the consultancy work that Claire and I are going to do, which will draw it out more officially into a report. Once that will help us identify the activity that needs to be undertaken, so whether that is a proactive, dry, preventative measure, or some form of detection work, or it's a reactive investigative function. I probably assume it will be across all three, so it's going to be quite a lot of work once we get there. It's a complex area. I'm not even going to pretend to say that I have any expertise in the field. So if we were looking to make decisions, if it's to do with a criminal case, it's a little bit different. It would rely on our expertise on the decision to prosecute, or with legal. If it's more about protecting the loss, and with the evidence we found, the decision wouldn't be made by counter-fraud, it would be made by social care experts.
Makes good sense, thank you. Councillor Bells.
Thank you, Chair. Just on like the London Counter-Fraud Hub, you work with other councils. I mean, we've obviously set high standards in Hillingdon with all your awards and everything, which is well done. And but how many other councils do you work? Do you work with, our immediate neighbours, or do you work across London? And how does it work?
So, in terms of outside of the hub itself, we have the London Borough Fraud Investigation Group. There's an exec board of about, I think it's 10 to 12 members. I'm very fortunate that I have 3 members from Hillingdon Council that are on it, which does help sway the direction of travel for the rest of London, shall we say. we have in terms of yes, outside of the hub, if we have any sort of concerns for risks that we can see that are going cross borough, then we'll obviously speak to our counterparts. There's opportunities to jointly work, share resources if required in terms of the investigation, and again, when it comes to prosecuting, if required at the end. The hub itself, if I'm very, very honest with the committee, it probably hasn't got to where I sort of envisaged it to be with London working. I think it's been in the press quite a bit. I think the Standard picked it up recently that the biggest ticket item that's come out of the hub is the agency matching across payroll. There was quite an article on that, and we are working actively through all of those matches at the moment. I think some of the other risks that we could have done more with is with housing, etc. has been a bit more challenging. I think every borough has its own set of priorities, and they don't necessarily always align when we're talking. So it has made it difficult. What I can say is in-house, we are using it all the time because we can in-house data match. There's data sets already in the hub from the National Fraud Initiative. We can put our own data sets in, and actually that's working really, really well. If you go back to the progress reports every quarter talking about sort of, unfortunately, people that passed away in council tenancies that we didn't know about, and actually they were going undetected, so we could get the properties back. So hopefully that answers the question.
Thank you very much. Okay. Quick question from me on Appendix C. You've helpfully put in the team structure, something that is useful for us to remind ourselves of. Any vacancies at the minute, or have you got a stable team at the present time?
No, I'm going to touch wood. I am very stable. I have a counter-fraud apprenticeship vacancy, but that's actually being used at the moment for a counter-fraud trainee casual position. The reason being is that trainee is in their last year of accountancy degree, and they're due to finish. And the plan is then to move them straight into the apprenticeship role and on board with SIPFA to become a qualified investigator.
Fantastic, good. Always nice to see a kind of full complement. I think you maybe glanced over, or maybe I didn't hear it, the target that's been set for next year. You knew I was going to say something about the target. No, I don't really care about the target. It's about doing the work and doing the work well as you've done over the previous year. The target is irrelevant to me in that respect. I'm sure you're going to have another very successful year. So again, please pass on the committee's congratulations to the team for a job well done last year. Keep up the good work for this year. Thank you very much. Thank you. Last but not least, agenda item 12, which is just, I think, the work programme. Ryan.
Yeah, so this basically just outlines the meeting dates for next year, and then in terms of a work programme, that is something that I will draft and share with officers ahead of time for all of next year.
Thank you very much indeed. I make that 1 minute to 7. I think that's just about within tolerance. Thank you very much indeed. We'll see you all next time. Thanks for all the reports. Very clear, very thorough. Keep up the good work. Thank you.